Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the markets today? Dow's down about 200. Nasdaq's kind of flat. Now we got Jerome Powell coming out and talking in about 15 minutes from now. I don't know what he's going to say, but I do think what he's going to say will send the markets moving, either up or down. It could be either direction. Now overall, I think the markets are going to come back in. Now why do I think that? We've had this big run up in the stock market, right? Up about 15% off its lows on the Dow Jones, but the Nasdaq didn't really participate in that run up. It didn't make that big move up. You see, the breadth in the market is very narrow. A few stocks are going up, but most stocks are staying down. This tells you that this is a fake rally. It's a false rally. Now on the strong side, we're in the month, coming into the month of December. December is a very strong month for the stock market. They have what's called the Santa Claus rally. Now, I'm not sure I'm going to bet on that this year. Actually, I'm betting against it right now. Now, if we come down, we may get that at the end of the December month. But right now, I'm betting that the market's still going to come down. Now, Jerome's going to talk today, and I would not be surprised if he pushes the market up after he talks. The market will react to what he says. And it's very possible that the SPY comes back up to the 200-day moving average. It got rejection there. It's come down, but I think they'll take another run at the 200-day moving average before we move lower. Right now, it's in between the 200-day and the 20-day. Now, if it goes down to the 20-day, I think we will get a bounce off of that before we go down lower. But if you look at the VIX, I like to look at the VIX. The VIX is when I look today, right at 22. It's trading at 22, right? So if you go look at the options on the VIX and look for the 22 options, I looked around December, right around Christmas, the options are trading twice as much for the calls as they are for the puts, meaning that a lot of people are betting that the volatility is going to go up and that would send the market back down. I think this market is overbought and it's going to come back in. We'll see how that plays out. Let's move over to the real estate market. Okay, so the real estate market, what we got here, well, let's talk about new home sales first of all. Now everybody's all excited because they had a little tick up, right? They were falling, sales volume was going down, and then last month they ticked up a little bit. Look, nothing goes straight down. But there's a 9-month supply of new homes for sale, right? It's going to take 9 months just to get rid of the inventory that they have right now. 9 months. Okay, well, that's reasonable. Normal is about 6 months, but it's a little overbuilt at 9 months. But here's the thing. Okay, so home building is at a record high right now. In October, there's 1.7 million units that are still being built right now that are going to come on to the market. Now, this is going to, send prices what direction? Well, when you add that inventory, the home builders, the prices, they're going to have this fire sale. Their prices are going to start to come down because they got 9 months of inventory to get rid of right now, but they got 1.7 million new units being built right now. Now, the reason these units are being built is because these demand triggered, right? During the pandemic, everybody was moving. They wanted to get out of the cities. They wanted to move out to the suburbs. They wanted to move. They wanted to get away. Okay, they didn't want to stay in the big cities. So the building really picked up, and they're building at a record pace right now. 1.7 million units are being built, and that's going to be dumped onto the marketplace, which will put downward pressure on prices. Now, I want to talk a little bit about buyer's remorse. Okay, so buyer's remorse. People that bought in the year 2021, even this year, 2022, right? All right, they take a poll of them, and take a survey. 75% of them have buyer's remorse, right? They feel that they paid too much money. They feel that they've have repairs that they weren't told about these repairs because a lot of people weren't even getting inspection reports. You always want to get inspection reports. I will not sell a house that doesn't have inspection reports. And okay, let me tell you a quick story. This is well, it's not funny for the people that bought the house, but it saved my butt, right? Okay, so the most expensive house I've ever sold was $5 million. $5 million. And they came in, they paid all cash. They were very wealthy, and they came in, they bought the house for cash. But here's what happened. The very first storm we had, anyways, part of the roof caved in and caused $250,000 worth of damage. Now, of course, the lawsuits come out, and of course, who they want to sue? Well, the realtor, of course, right? Well, the realtor says, well, hey, look, you had inspections. Here's your inspection report from the inspection company. You got to go sue them. And anyways, it started to go through the court process. Long story short, they're very wealthy. $250,000 to them was not that much money, but believe me, they weren't happy. And of course, they're not happy with the realtor, but the realtor told them, get the reports. They got the reports. The report said it was good. Okay, so the inspection guy was to blame. But anyways, that's just always get an inspection report is my point. Do never buy a house. But in 2021, 2022, a lot of people weren't even getting inspections done because they wanted the house at any cost and they overpaid for it. And now they have this thing called buyer's remorse. Well, this is kind of funny to me because look, the buyer's remorse shouldn't even be kicking in yet. You see, they're going to learn a new term. If you bought a house in 2020, 2021, or 2022, you're going to learn a new term. It's a real estate term. It's called negative equity. You're going to have negative equity in your house. If you put 5, 10, even 20% down, you're going to end up with negative equity. Now, this is going to go down, right? Prices are going to drop 40 or 50%, in my opinion. And that's going to cause negative equity. Right now, a lot of people already have negative equity because they've come down 10% in many areas. And if you put 5 or 10% down, well, you're at the break even at best. And then you got 6 or 7% selling costs just to get out of it. So you're going to get very familiar with the term negative equity. But it's worse than that. A lot of people think that this negative equity will last maybe 1, maybe 2 years because they're expecting the Fed to pivot soon. And the pivot would send the mortgage rates from 7% back to 3%. I don't think so. Look, at the last time the Federal Reserve pivoted was in 2008. Okay, so the Fed sees something broken, and that's usually where they make a pivot, right? So they pivoted in 2008. When did the housing market bottom? Not till 2012. 4 years later, right? So it takes time for this to play out. It's going to take time. But this negative equity that they're going to feel, they think it's just going to be for 1 or 2 years. I'm telling you, this negative equity could be for 5 or 10 years before prices get back up to the price they were. Look, prices are coming down. Negative equity is going to happen. A Fed pivot is not going to save you. A Fed pivot is the time to worry because that's where the houses really pick up steam to the downside. That's just how it works. I'm sorry, that's just, I'm just the messenger. But anyways, so you're going to have a lot of buyer's remorse, right? And what's happening right now, here's the thing. Okay, so there hasn't been any pain felt yet. There's no pain yet. The market's barely down 10%. And of course, in your area, it's still going up in your area. So there's no pain being felt. But look at the mortgage rates have almost tripled. They were below 3% and they got up as high as, well, they got for 7, 8%, depending on your credit score. So they almost tripled. And I think by next year at this time, it'll be up around 10%. That's my prediction for mortgage rates this time next year. We'll see how that plays out. I hope you're still listening to me. But the pain hasn't played out of that yet. There's no pain yet. The prices haven't come down. So the pain from the mortgage rates going from 2.7% to 7% is going to feel a lot of pain. That pain's going to drop houses 35, 40, 45, 50%. I think 50% from the peak. And a lot of people say that's not possible, but it's really not not that much. Look, we've had a big run up, 20%, 20%, ran up 40%. So yeah, drop 50%. You're only really dropping 10%. You're wiping out 2 years plus 10% more. I'm telling you, that's very possible, and that may be a conservative estimate. So the pain is still coming. The pain is not here yet. The negative equity, some people already have negative equity, and they're feeling the pain, but they're going to feel a lot more pain. The pain is coming to the housing market. We're at that breaking point right now. Look at the breaking point. What we have is a market where the sellers, you see, like in 2006, 2007, 2008, I could sell a house to anybody. I mean, they didn't have to make any money. They were known as what's called liar's loan. Just say you're making money. They'd give you the loan. They had no right buying those big, expensive houses. They couldn't afford them. And sure enough, we had the subprime mess where all the houses crashed down. All right, so now it's a little bit different, right? The people, they're qualifying them a little bit better, and they can afford to buy the house, right? So they went and they bought the house. All right, but what they didn't expect is this equity to disappear. They put their 20% down. Already half of that equity's gone. The other half will be gone really soon. So they're going to get into a negative equity position. Now, right now, there's no pain. They're not selling. It's kind of what I would call a sticky market. Look at a sticky market because the sellers, they don't want to sell because they think the Fed's going to pivot, and they think that's going to send their house price back up higher so that they can make a profit. It's not going to work that way. The Fed will pivot sometime in 2023. They're going to pivot because something's going to be broken. My guess is that it's going to be the real estate market's that broken, and the Federal Reserve will pivot. And then the sticky market, we're in a sticky market right now. I mean, nothing's going on. We're in the slow time of year. This is the Christmas season, the holidays. Nobody's buying, nobody's selling, nobody's really concerned right now. But look, as that equity starts to come down, there are going to be people that get really nervous, and they're not going to be a sticky market anymore. Right now, the sellers are very nonchalant. Look, I'm not selling now. The prices are down. I'd be a fool to sell now. Well, I disagree with you. I think you'd be a genius to sell now. Now, you wouldn't be a genius like Billy Bob, who sold at the exact top, but you're getting within 10% of what Billy Bob got. So you would be pretty smart, especially if I'm right. Now, I'm not saying I'm going to be right. I'm saying my prediction is 50% drop. So you could get out here at the 10%, and then you got another 40% that you would save if you bought back in. Now, this is not advice for you. This is just what I believe. Now, if you want other real estate brokers, I am a real estate broker, just go talk to your real estate broker. He'll tell you it's a great time to buy, that prices are going to rebound. The Fed's going to pivot. It's going to be sunshine and blue skies. Everything's going to be okay. I don't have that view. My view is a 50% drop. My view is that we're at the breaking point right now. Something's going to give. Either your income is going to double next year, or prices are going to come down 20, 30, 40% next year, and it's going to continue down until we bottom out. In 2008, we never bottomed out, right? We never bottomed out from the subprime crash. What did they do? Why didn't we bottom out? Well, they printed the money. In 2009, they started printing $3.6 trillion just to prop up the housing market in 2009. And they continued this printing of money going forward 2010 till now to keep the housing market propped up. And guess what? It did work. And now we got this huge bubble. This bubble's going to pop. There's going to be pain. There's going to be negative equity. This is the breaking point for the housing market right now. Very pivotal point right here. Now, the Fed may pivot, but that's not going to be good. That's going to send your houses lower. That's just my opinion. I'm Tall Mike. You like this stuff? Give me the thumbs up. Why not? It's Wednesday. Get out there, everybody. Have a great Wednesday. We'll talk again later in the week. Bye-bye now.